What's up, everybody? Eric Mashinsky from Gold Investment Letter Elite Investments. And I'm here today with a special guest, which I'm super excited to talk to and about with everything going on in the world from a very high level. Somebody that I've learned a lot from. It's Raoul Pal from, Real Vision and
Global Macro Investor and a whole bunch of other things. So
yes.
It's great to be here, Eric. Good to see you, my friend.
You too. And really glad to have you on. And, there's a lot going on. And so, it's like picking where to start. Let's just flow with this. Raoul, I don't think anybody really, it's like a little bit of a mystery to a lot of people because you're getting a lot of exposure and people are seeing that you are a thought leader in crypto, certainly, and you've gravitated towards crypto, as have I, because it is where it is going. The world is changing and it is not going to stay in the system in which we are in. It is going to go away. And that's what I believe anyway. But tell us a little bit about, your background on the street and then, just your little bit of your journey.
So look, I graduated from the only university that would accept me into a recession. So at bad university, into a recession, had the crazy idea of wanting a job in finance in a banking recession. So I struggled to get there, but I got there in the end. And I ended up being hired as a salesman in the equity derivatives division of a brokerage called James Capel, part of HSBC. It was a very kind of distinguished English brokerage firm. I was doing equity derivatives, which was the new hot thing. Then two things happened. One, 1994 comes along, the bond market crisis, and that's the rise of the macro hedge funds. They're out there, Tiger, Soros, Tudor, all of these guys, and that they start moving from bond markets to currency markets into equity markets as well. And so suddenly I start developing this new customer base. So I'm now basically selling European derivatives to the world's biggest hedge funds. I then moved the whole team to NatWest, which was a big UK bank at the time. And in my gardening leave of 3 months where I wasn't allowed to work for anybody, I got a phone call from the guy who'd hired me and said, look, something's changed here. There's 120 people from Morgan Stanley just joined and everything's changed. I'm like, okay, well, what's happened to this team I've moved across? He goes, well, we'll figure it out, but you'll like these people. So I turn up, this guy called Rick Goldsmith, who was like the most famous derivative salesman in the US, the hedge fund guy. And he goes, Raoul, look, your old job as head of your international derivatives doesn't really exist anymore because we're going to split it up and change it. What do you want to do? I said, I just want to focus on hedge funds. This was 95. He goes, I just want to focus on hedge funds. He said, fine. He said, come out to New York next week and I'll introduce you to everybody. He said, who is it that you want? I said, here's the 10 largest hedge funds in the world. Let's start with that. My first meeting was Paul Tudor Jones, then Lewis Bacon from More Capital.
Wow.
Then the team at Soros, et cetera, et cetera, et cetera. And I became the guy in Europe. So then comes the Asian crisis. I moved from NatWest to Goldman, and I got hired by Goldman to build the hedge fund sales business, which was the easiest job in the world. If you call anybody up, say, hey, it's Ralph from Goldman Sachs, and they just want to deal with you. So it was the easiest sales job in the world, and it was the most exciting time of my entire career at that point because everything was blowing up and it was macro, and I'd figured out how to think in a macro way because I got taught by the best people in the world how to do it. And I was very visual. I could use a chart, so I could pretty much flick around. If I had to start understanding what was happening in the Malaysian markets, I could figure out pretty quick. And I could see the linkages between the asset classes, and that became the macro thing. And then at Goldman, I was through there. I saw that the crash was coming in 2000, the bubble, it was pretty obvious. And I wanted to trade the other side of it, i.e. the recession. So I got offered jobs by a bunch of my clients, and my biggest client was GLG Partners, which was at the time a gigantic European hedge fund, multi-strat hedge fund firm, and they subsequently kind of took over Man Group. They hired me to start a macro hedge fund. So I did that as a salesman, made all the mistakes that salesmen make, like over trading once I start. And then, I get to trade that whole recession, amazing period of time, fantastic. And then decided that I wanted to opt out the rat race and move to the Mediterranean coast of Spain and started writing. Because I've been writing at Goldman just in internal chats, and everybody from the chairman of Goldman down would read my chats because there was these macro chats and people liked it because it was a different spin on the world. And then I went to China on a Morgan Stanley trip back in 2004. And I wrote an article called There's Something Wrong in Paradise, which was the over construction that was going on in China. I'm like, this is a big mess. And I wrote that article just for me to think. You and I were talking off camera how we like to write so we can think. So I wrote it just so I could think through that trip in China, because everyone was so bullish China and I became quite bearish. And I sent it out to a few brokers and friends that I knew who were portfolio managers. And I think Stan Druckenmiller got 7 copies of it. And at that point, I realized I could engage people by writing. And my experience in the hedge fund industry, which now like 13 years, 14 years, was very relevant to a lot of people because the hedge fund industry was now booming. So I moved to Spain, traded in quality of life, and started Global Macro Investor, which is now I still write to this day, which is 17 years later, still read by, I mean, my first clients are still subscribers 17 years later. And it's read by the world's biggest hedge fund managers, sovereign wealth funds, family offices, pension funds. And it's amazing. And then in that, while I was there, because we're going to get onto crypto, is 2008 I saw coming, wrote about it, got quite well known for that. Many of the people in the film The Big Short were clients of mine at GMI and still are. Everyone made a lot of money. Then 2012 came along when Europe almost blew up. Don't forget, I mean, Spain, Italy, France, Greece, they're all going to go bankrupt, right? We're going to lose the entire system and the banking system. I was having to store, you know, every gold investor loves this. I was having to store tin food and a generator at my house because I thought we were going to lose the banks. And so anyway, we got through that, and I'd forecast all of that as well. And I thought I need to do something about this because the leverage has not gone away. We're just shuffling it around. And now we'd introduce QE as a way of, you know, printing money to kind of hide the issue of the leverage. And so I was going around the world with a bunch of family offices trying to start the world's safest bank, which was a slightly hubristic thing to do, but I thought I could give it a go. So, you know, I was in Singapore and Switzerland and the US trying to do this. And then a GMI client, tapped me on the shoulder and said, we looked at Bitcoin. So that was still 2012 probably. So I looked at it, did some work on it. 2013, I bought it for the first time.
Where? Mount Gox is the place, right?
No, the friend of mine who told me about it had started an exchange called Itbit, which is now Paxos.
Okay, nice.
So, and Itbit was in Singapore. Then he got a US banking trust license and was out of New York. But I opened from Singapore, so it's early days. And so I got involved from then, and I wrote the first ever macro strategy piece on valuing Bitcoin in 2013, backing out the price of gold and saying, listen, they've got similar attributes. Here's the stock to flow of gold. That's me doing a rough, you know, thumb. I'm not using advanced econometrics or anything. Here's the known supply of gold, the known reserves of gold. Well, if Bitcoin looked the same and it was at $200, I said it's worth $1 million with gold at 1,300. And so I said, listen, this is the best opportunity I've ever seen because the risk reward is so good, because let's assume that Raoul is a total idiot and he's 90% wrong and it's worth 100 grand. Right. So you're buying it at 200 and Raoul's idiot trade, it's worth 100 grand. So I was like, okay, I've never seen anything like this. So that was my crypto journey. Then I start Real Vision because I want to also, having seen these financial crises, realize that I had the access to all the information, being the epicenter of everybody, that other people didn't, and I wanted to change that. So Real Vision was a way of democratizing that by using video and interviewing the world's smartest people on it. I mean, you've been on Real Vision, trying to get access to everybody to this. So we've got a level playing field, and giving people the right tools, getting to develop a framework. So that was that. And then we, in the first video on Real Vision, had crypto, had Bitcoin in it. And I talked about it from day one and said, these are parallel tracks to finance. Well, they weren't parallel, they're converging, but they feel like parallel because they weren't converging very far back then in 2014. And I always said the next recession, macro and crypto are going to be the same thing. And lo and behold, 2020 comes along. It's a beautiful chart pattern. It's the right point in the halving cycle. Macro and crypto have met. Central banks are going to print unlimited amounts of money. It's like, here is the biggest opportunity any of us are ever going to be given. And that, I think, proved right.
Absolutely. Do you still have $200 Bitcoin in a wallet somewhere on the books?
No, because I sold it at $2,000. So I
I
10x.
sold it at 2,500 from, but I owned it twice as high, and I didn't have a lot of money in it the first time. But
No, I didn't have a lot of money in it first time, and I sold it at 2,000 because of these forks that were happening in 2017. I'm like, I don't get it. The market gone up. I thought, I'm out. Thank you very much, and then got back in 2020.
yeah, that's awesome. And with Paxos, I'd love to chat with him because my biggest gold position is in Paxos Gold now.
All right, okay.
I
So
use it.
Chad has been on Real Vision a lot. So Chad Cascarilla and Mill Woods kind of founded these businesses. And Chad is, in fact, I'm just interviewing him for Real Vision soon, is phenomenal. He's phenomenal. What he's built at Paxos is kind of world-class, institutional, legally compliant, excellent.
I could see it. I looked at it. I don't, allocate easily with whatever. I mean, I think like I'm not interested in GLD. I'm also not interested in carrying around. As we've seen, there was actually a 21st, 22nd century Time magazine cover that came out that called the low on gold when it was a campaign to drop it with these heavy bags. And I'm like, wait a second. Yes, there's physical gold, but everything is being tokenized. Don't you remember this? What's going on here? And that's what I want to start with, this question, which is really, it bothers me, because if it actually people like understood from both sides, you've got gold and you've got digital gold Bitcoin. I have, these are my two loves. Probably at this point, they're equal for different purposes. They are not competitors in my view. The reality is that everybody talks about, here, let's just get this really straight, because digital gold is the store of value with Bitcoin. This is how I think people can wrap their head around it, at least, but they're not getting the whole deal. And so are you in Bitcoin? Because it's like, when I look at it, am I in Bitcoin for a store of value? Are you in Bitcoin for a store of value? I'm in it to get rich. It's a venture, early stage, on like play on the future.
Look, it's a nice narrative. And if the technology is as powerful as we think it is, and it has network effects, it will go up in value over time. Does it offset the central bank balance sheet? It looks that way, but who knows? It's an exponential bloody asset. It goes up anyway. It should do in theory. So yes, it probably is a long-term store of value, but who just wants to store value?
If you want to store value, we have one. It's been going up for almost 50 years, 10 points per year. That is a store of value and a track record of over a millennium. The thing is that I think is really like, it could go like this, because I'm talking about guys that I absolutely respect, that are way smarter and innovative than me. Everybody from, the Grayscale guys, or, I listen to people like Pomp and Novo and all these different people. I don't know about Novo exactly with the take on gold, but the consensus among the big money in crypto is that it's that Bitcoin is taking market share from gold. That's what we talk, the Winklevoss twins. Listen, guys, here's my message. Do you know who the ripest, absolute best prospects to adopt Bitcoin are? It's gold people, because we understand the monetary system, and you're making them an enemy. Yeah. And really, I think they serve two different functions. And I'll just say this and let you talk. It's gold and Bitcoin, which you have a store of value in gold. You have Bitcoin, which is a future store of value after it gets adopted everywhere. And they together are what takes the bite out of fiat in this fucked up system we have, this beast of a system.
Yeah, look, I mean, the combo, if those are your concerns, then the combo of gold and Bitcoin is actually a nice portfolio. It's actually pretty decent. And you can sit that quietly. Gold dampens the volatility somewhat. Crypto gives you upside. Super interesting. But to talk about how it's taking market share, and it is, because I'm seeing all the family offices allocate outside of gold because of it's just storing it, moving it around. It's bloody clunky and experience in the contemporary age. And like one of my clients for Global Macro Investor is a famous, very elderly, well, in age, not in mind, Italian industrialist. And I mean, he's a gold guy. He's a gold guy. You know, he grew up having to escape the war into Switzerland, across the border from Italy, blah, blah, blah. So he's gold guy through and through. I mean, his crypto position now for the last 2 years has been 5 times that of his gold position.
I mean, I have way more money in crypto than I do in gold. I mean, but the reality is, I think at some point, which is why they created stable coins, say you make an absolute fortune on a volatile as heck, asset, you want some of it to go into something safe. To me, gold is where the safest asset on planet Earth exists. That's my opinion, because of the way that it still has that store of value function. My contention, because it's been trading, it has seen outflows. And that's why I told people at GIL years ago, you got to pay attention to this. And then even like 2020 in that summer, we would see, even though the market was over like 20 times as big or whatever it was, over 10 trillion. And then this is when Bitcoin's coming up in the 2000s. I think it was like, I remember it, if I remember correctly, around August, where you saw gold getting like whacked and Bitcoin was flying. There was money moving and it was taking money directly. It did it for you. I know for you. So
I sold my gold because I had a bunch of gold. I saw what was coming, and gold was obviously the right thing to hold. And I sold my gold because I just looked at the Bitcoin gold chart and said, why do I own gold? That's not to devalue the value of gold in somebody's portfolio, but it wasn't right for me. I had an income.
Absolutely.
I didn't need it. What I saw was the biggest opportunity. So I'd use it to cushion, because we didn't know what the hell was going to happen in March, April, May. But then after that, I'm like, no, now's the time to go for the other opportunity. Gold served its great purpose for me, worked very well. Let's move on.
Yeah, and to me, I think the way that gold helps is more and more. So that allocation that I have in like actual physical gold, if you will, through like, I mentioned my biggest being through the Paxos PAXG recently, and I started allocating that. But I have, different mechanisms, but that's also to protect myself from myself, as you've talked about, where the volatility in crypto is incredible. And it will, I tell people, don't look, just all rookies, pros, don't touch it. You're going to try to out trade Bitcoin and crypto. You're going to get your head smashed on the curb. And like, so just don't do it. But the gold is there as a function of, and listen, I have the same in like the stable coins where I'm getting 10 points on cash, staking it.
Yeah, but we don't know what risk we're running there. I mean,
exactly.
Gold has that layer less of risk. We've got a great gold storage vault here in the Cayman Islands. It's a grade 1 storage vault, and that at least there's no liability, no loan against it, no nothing. And that's gold's great thing. That's where it shines.
I think so. And it's also where, like, I know that the fiat that I'm in now, if I'm making 8 to 10 points on it and there is not too much tail risk, I hope, I don't really know, in some of these formats, you never know. So I look at it as, I spread that out in different areas and moving more and more to DeFi and things like this. But
because even if something goes wrong, let's say you've got 5 of these different yield plays and one of them goes wrong for whatever reason, so your blended return ends up being 6%. It's still
exactly
huge compared to normal, right? So even with default or something going wrong risk, if you diversify, is absolutely fine. I'm sure of it.
I mean, you tell me that, this is where this, whether it's the guys at Coinbase, Circle with USDC, Tether's got some mystery to it with certain things and possibilities, but, you tell me the Circle and USDC, and then you've got, the Binance and the Gemini tokens as well. Do you think these guys are doing anything funny? I don't think so. Like they've got what they've got and they're still able to pay, and other platforms are able to pay very, very juicy, yield. I mean, I'm getting like at least 8 everywhere. And that includes BlockFi, that includes everywhere, spread out on all of those different tokens. And it's okay if one of them like the guy in India who dies and they take all the money. I don't, whatever. I'm expecting it. And why would anybody sit with big money? I mean, you need money in a bank to facilitate and cash and all that stuff for now. But the reality is, you're getting what now? Is it even up to like 150 bips, or I don't even know. I don't even look. I don't care. It's nothing.
No, I mean, I think this is going to be one of the realizations that a lot of people have, and you're not the first person I've seen to have the same realization, which is you sell something in crypto and you go, well, I don't need to put it in my bank account. And then you realize you immediately flip it into a stable coin. Within 5 minutes, you're earning yield. And you're like, huh. So all of that, I have to go to a middleman, I have to pay them to get access to this product, and then that, and the bank takes 3 days to clear. It's like, well, it's all nonsense. Why the hell would you even bother? And I've seen a lot of people go through this. It's like, I just paid my physical living bills using my bank account. But why bother with have your assets in a bank? I get it. Makes sense. It's amazing.
And this is the beauty and unbelievable, just the story and the genesis of Bitcoin and where this is going and what it's doing. Because I'm of the opinion, I mean, it depends on how much you want to talk out about it, but this system we have, when you're talking about fractional reserve central banking system that all the governments are running and diluting the hell out of our currencies in a silent way, almost, people that don't know about it. Look, you and I are doing fine in it, so I'm not hating on it, but I don't like it. And it's really one of these things where all the centralization, all the little locust bites of fees and this, it's what keeps like most of the world down, and they don't know what is going on. They think it's like a president who's going to change it, and it has nothing to do with it. It's a system that needs to go. And I tell people when I'm talking about Bitcoin that it's kind of like Bitcoin is the Scud missile to this system, and it's already left the water. It is well into the air. What do you think about that? And do you really believe, because everybody's like, well, they have too much control. Well, guess what? I think that they're trying to slow it, but they can't stop it.
I think of it slightly differently. I think it's a new world being built at the same time. And it doesn't need to destroy the old world, because we're all going to migrate there. And what we're seeing is that's what network adoption is a migration. You and I have just talked about, well, do we really need a bank account for most of our savings and investments? No. Okay, so you've now, 75% migrated. Okay, that's amazing, right? And you've migrated to another world that functions really well. We're still testing it, but it functions really well. So what happens is, over time, people become less reliant on the old world. And this is what people miss about the central bank digital currencies. They're actually making it easier for you to migrate to the new world. And I think that's purposeful. I've had conversations with the Department of Defense and all sorts of people. They know, they're fully aware of the risks that the leverage has within the system, the interconnectedness of the financial system. They're completely aware of it. So for this to be a way for the system not to blow up, it ends with a whimper and not a bang. Everybody, the gold community was always, it's gonna blow up one day. Well, we've learned that you disguise the blow up by printing money.
Exactly.
And the value of the denominator goes down, so it looks like your assets go up, but you actually have not got wealth.
Exactly. That's the problem. It's still fiat.
So, right? So bit by bit, people just move. And so in the end, when it all blows up, we've got a new system. So, my guess is, if we had this conversation in 5 years' time, my guess is most securities will be on the blockchain. Equities, bonds, futures, everything. So then what does that mean? It's like, well, if somebody goes bust, you know who owns what. Now, if you start putting the derivative contracts on, okay, now we've got rid of most of the issues that are going to lose your or my money from a bank account. But now we're in the crypto world anyway. The central bank digital currencies allow for this movement. So they're building over there this brand new financial system from scratch at ridiculous speed and inviting us over. It's like discovering the Americas all over again.
I think so. And the concern, though, is that you know, they're moving over to survive. I mean, they're not quite getting it yet, I don't think, from a government level quite yet, you know, in terms of like people are worried. I see things like the CBDCs are saying goodbye to your privacy. What do you think you have right now? Zero. Like, I mean, come on, like this is the stuff that they've got to do to survive longer.
I mean, that irritates me, the conversation about central bank digital currencies, they're coming after your privacy. Firstly, you've given, that's somebody screaming on Twitter, right? So which has their information. And then they're on a Google browser that knows everything they've ever looked at, everything they've ever bought, everything they watch, everything. You've frozen. Okay, there we go, we're back. So can you hear me? I can hear you. You're on mute. There you go.
Okay.
Yeah.
Should be okay.
So basically, Google knows every single thing that you do. In my house, I've got Nest. That knows, because you come in the house, you put your phone down. Well, the Nest knows what room you're in. It knows, Google knows where you are. So do Apple, anywhere in the world, any time of day. And everyone goes, well, you know, governments and money. I'm like, okay, how often do you use dollar bills? I mean, basically, it's to tip the guy who parks your car. That's it, right? So all your bank details are basically available for the government. All of your Google details are available to private people, and you can buy them. So why the hell are you worried about your money transfers? They know anything anyway, to your point. It's just a non-answer.
Crazy. I mean, it is going to be bullish in the sense that as an on-ramp, that's going to broaden, you know, is like instead of Diem, which is like having problems, like I think the CBDCs, but anybody who really thinks that they're going to track you better or be able to find you know, your crypto that's you know, decentralized or whatever, it's they don't even know what's going on. They're trying to still build their things, and it's like, you know, but anyway, but the concern I have is that yet we're going to have them there and they're going to be you know, in the game, but the game's got to change. We don't want the same regulators trying to step in, the same, you know, rules that are just mired in red tape. And I mean, I tried to send wires yesterday from Chase, which I have 3 accounts for well over a decade, corporate, foundation, personal, and these wires get stopped so often. And I had, you know, a sale of a condo close, and a big chunk goes into one of my LLCs, and you know, then I'm going to send out wires and you know, I move it around to my accounts and get it out. And I'm trying to put you know, money over to a New York Stock Exchange traded company who's doing a McEwen Copper, McEwen Mining. They're spinning that out pre-IPO, so I want to send in money, and they stopped it. They said, call us. I'm like, good God, because my assistant did it online instead of going in. And I end up calling them. They're like, you could do it again now. She does it again like an hour later. And then this morning I woke up, they stopped it again. So I got to go to a branch, you know, and it caused a lot of problems. But right before that, with this house I'm renting, to get a wire out, where literally, Raoul, to get in over the weekend to follow this protocol and legality within the real estate world, I had to get, you know, first month and security deposit up front. It's a 3-month lease, no problem. But they didn't get to me in time on a Friday before the banks closed to where we could finalize the deal. And I got to get out of my place by Saturday night with my stuff and my dogs, right? And so I'm looking at, I got to get in there by latest Sunday morning or I'm out. You know, I got to go find somewhere else. So the broker's trying to push it through, does so. But, you know, it's one of these deals where, you know, the guy's in Switzerland and, you know, he's a hard ass. And this broker basically said, well, you could get a cashier's check and then we're good. I'm like, okay, fine. But, you know, let me just make sure what's going on, because my accounts are going to be light for one day. And that's going to be Monday, because I'm closing on this real estate transaction on Tuesday. So I had enough for the cashier's check, gave it to them. And then all of a sudden he wants a wire on Monday. So I had asked the bank on Saturday, like, look, if I make this out to me or to him or to Cash or whatever, I could just put it back in case he wants the wire instead. He's like, yeah, no problem. I go back and I do it on Monday, and it's frozen for 2 days, the funds. So I have to basically scramble to like get my own wire to Julius Baer in Switzerland, from my primary bank, which just is like killing business, and I do not like it. And the bigger they are, the more that they do. So that's the concern, is that there are things that have to be not only bruised. I'm not talking about Chase in particular. I've been using them for a long time and I still will. But I'm talking about the system. It is just, there's going to be, they're coming over and this and that, and that's fine. But, I think there's got to be a point where people stand up. It's almost like wrapping in, the whole things that are going on in the world. How do you separate the COVID talks and the vax and this and that from all this stuff?
So, but let's change that world and go forward a few years. So now you've got the balance of your account, you're running your business, your foundation, your personal money on your stablecoins account. The bloke in Switzerland says, sure, send me stablecoins.
Yep.
The transaction is fully confirmed and verified in about 5 minutes.
Exactly. 3.
And there is no bank in the middle, no closed on weekends, no teller who got it wrong, no person to call. It's just,
exactly.
It just changes all of that hassle. Yes, the onus is a bit more on you because there's no help desk in crypto, Whereas
but you know what? It's because this is why the adoption it's unstoppable, but the consensus among big money, and I'm so glad with your role of it is, as you know, it's an education process, but who's going to actually, when they actually understand this, like who is not going to start to adopt for these particular reasons where, you're 24/7, which is what a bank, my money, if I'm out at 3 a.m. on a Saturday night, driving to another city or something, why shouldn't I be able to move my dough? And why does it get stopped all the time? But this guy in Switzerland is he's made his money in the usual system. And I didn't even want to bring it up because I could tell, this is just not something that maybe he was into crypto, but it's like too early. I was talking to the brokers about it. And then now I've got a story again, it's just so fresh about why this is necessary. And it is amazing. And so I think we're on the same page with it. And it actually, with Bitcoin though, what do you think, and we'll wrap this up, soon, but what do you think with regard to, look, the regulators and the governments, I'm not opposed to regulation, by the way. You need some regulation, right? So, but it's the regulation, look at a prospectus. I have a company that's friends that are, they're very, very, very high level, honest, everything. And they're just trying to do a really small seed raise and for the first time. And they're going with their lawyers. They're just look at I'm if anybody looked at the risk factors in a prospectus or whatever subdocs, nobody would invest in anything, right? So it's just the whole tape. And so with them coming after, so to speak, stopping, India, big news today. I'd love you to talk about that. But, you look at them being able to stop Bitcoin. They can't. It's part of the system, right? What can they really do but slow it if they want?
Well, the truth is whatever Jamie Dimon says, JP Morgan's scaling crypto massively. They're banking crypto firms. They have, I'm speaking at a JP Morgan event. I'm speaking about crypto. Goldman's doing the same. Everybody's doing it. All the investment banks, all the asset management firms. There's no way you can ban it, and there's no intention of banning it. They kind of get it. And I think, at national security level, they understand it's actually useful, right? It's useful. Gold is useful. People don't really want to ban gold because it's bloody useful if something goes wrong. So, I think regulation is the issue they've got is the 1934 securities law. So that is what is a security use, what's not. Then it only allows certain people to have access and others can't, and that becomes a very unfair system because all rich people get rich off VC and early stage investments, and the average Joe doesn't. So basically what happens is the VCs dump the stock once the company goes public, and many of these don't do well, which is what happened in the SPACs. A lot of them just went down in price. Mm-hmm. So how do you level the playing field? Crypto's early stage VC that's liquid. Okay, great. What you need to do is just give them a bloody warning to say, you're about to do a trade. Do you understand that this is a speculative asset? You can lose all your money. That's what like you do with options. If you can trade Robinhood options on Robinhood, why the fuck can you not trade crypto and anything you want? I mean, the madness that the fact that you could go to Vegas as an 18-year-old and blow all the money you've ever earned.
Right.
But, oh my God, if you dare buy a token that's not been approved for US listing, and then, I mean, that whole process just doesn't function anymore. And that has to change. And people will demand change, because right now, the largest part of the population are millennials and Gen Z. And they're a lot larger than us Gen Xers and the boomers. So they're the voters. They like crypto. They've been stiffed. They come at 30 years old when all of us kind of start investing. That, everyone starts getting married and does all that stuff. 30 years old, buys a house or, whatever, starts settling a bit. Well, they got all-time record real estate prices, all-time record equity prices, all-time record fixed income prices, all-time record credit price. What is their future expected return? And then crypto comes along. Here's their opportunity. I did that pension crisis video a few years ago. I don't know, it's been watched like 3.5 million times on YouTube now, but about this and saying, well, listen, the big opportunity for them is crypto. And so what? You're going to try and take that away from 160 million voters? That's never going to happen. So we're about to see a change here, which is the flexing of the power by the younger people to say, look, don't touch our opportunity set. Singapore recently regulated, and they just gave risk warnings. But, because the madness is also in the US is if you have less than $1 million, you're deemed to be an idiot and inexperienced, and you can't do anything. But the moment you have that $1 extra, you're now genius, and you're able to open the entire financial world is yours. I mean, who makes this rule, right? The reason sorry, I'm ranting now, but who makes these securities rules is that came out of the Great Depression. And what it was a way of centralizing the power within the banking industry, because you had to go through an intermediary.
But it's like almost 100 years old. Look at Swift. It's 50 years old.
Because what they said was the banks, clever, right? Clever. They go, well, look, all these people got scammed in 1929, 1930. What you actually need to do is let us manage that process. We can't let these little people. So what they take is fees, and off starts the financialization of the world all over again. With crypto, there is nobody taking the fees. Yeah, sure, projects get some fees and stuff like that, founders, but there's no middlemen taking fees in any significant way. You pay a bit of commission, but that's it. So it's that gated access that's going to go. So basically, it's a long answer to say they're going to regulate it in a way that will please the younger people, because they're not going to get a choice.
Yeah, because but we still, I think, from getting here to there, that doesn't discount the importance of the people like, the Gen X or you, like you, I don't know if you're Gen X or a little, I don't know where that goes to, but basically I'm Gen X, and then you've got the boomers that actually are the big wealth that are starting to get this. And they're like, you don't need too many to throw your weight around, but we do need that, because at some point it's like, just because they're younger and there's en masse, we got to say, look, no mas, this is going to stop right here. It's a fight on one level, right? I mean, it's a very
it's the fourth turning.
Exactly.
The fourth turning. It's writ large. It's bloody obvious. And that book was prescient. This is exactly what it is. It's a shifting of generational power. Our generation of Gen X is in the middle, and we have to help manage that change. But, you look at the age of senators and Congress people.
Unbelievable. They got to go.
It's got to go, because you're not representing the nation anymore. And that has to change. Now, watch this space. We're about to start the political season as we go into the midterms and then the actual election. A little bit of magic came out of the crypto industry about 3 months ago, the Constitution DAO. The Constitution DAO was a version of the Constitution, came up for sale, and a bunch of people in crypto self-organized within 2 weeks, raised $43 million to buy it. Now, they got outbid actually by the arch enemy, Ken Griffin from Citadel. But the point being is that the light bulb moment went off for me and everybody else. Everyone's like, well, I kind of failed. I'm like, no. You've let the genie out of the bottle. Look how fast this community, which has a lot of money, how fast it can self-mobilize, right? You couldn't do that in the banking industry, the pharmaceutical, all these lobby groups, right? That's a slow-moving machine. So watch what happens. There will be a DAO formed, and it will be a PAC that gives bipartisan support to any person running for election who supports blockchain. That money will be big, and it'll be young voters, and the politicians one by one will change, because what the crypto community is doing is what the oil companies do and everybody else. The oil companies all get together and write the rules for themselves. The food companies, everybody does, right? They rig the system. Here, this is the people doing it themselves. Yeah. This is what's amazing about crypto. You get together 10 million people and they write the rule book. That's democracy writ large.
Absolutely. And the fact of the matter is, I've been thinking about this, like, what kind of, and I saw that, but I really didn't know how formalized it was, and kind of glazed over it a little bit more than you did. And I love that you pointed that out, because when you've got these, the people that were anywhere near early in Bitcoin, and now with the market value of, crypto in general, there's a lot of rich people that, typically if you were in there early, you were like libertarian-esque, or you don't care about politics. Like me, I don't vote. It's just a bunch of bullshit at this point. I may do that, when things start to come on the scene to change, but this is where you vote there, and you don't have to go through this system.
And you're not even voting for a party. What you're saying is, I'm voting for this new world. I don't care what party you're part of. Exactly. But you want to, I want you to support my interests here, which is I want access to this crypto world, and I want you to make it happen. Okay, this is really interesting, right? This doesn't happen otherwise. It kind of, America is particularly broken in its fighting between left and right. This is a way of kind of solving that. And I've been pointing out to people one of the things I love about crypto is free market capitalism, and it's collective, progressive as well, because it's a society where everybody's together. You act as a community. It's not each man for himself, but it is to other respects. So it's like a blending of all of the worlds. And everyone's had enough of the fighting and the hatred. And
absolutely.
And we don't see that in crypto. Yeah, the Bitcoin crowd hate everybody else. But other than that, you don't see it in crypto, because it's just not relevant, because it's a societal thing. So we're all together in it, but we're all in it to make money or create businesses or create opportunities. Love it.
Yeah, you're talking about the maximalists, but basically, like, there's the spirit of crypto. This is where, and we'll wrap this up, but the spirit of crypto is different. Like, what I say is that when I'm going on to the new banks, like say you go onto one of the new platforms, whether it's Celsius or BlockFi or any of these, it just seems like the spirit of it is different. Because say, for example, what they're essentially doing on their models is it's the same as the street. People have to resolve their books at the end of the day. The institutions, they might be short and have to, take this or that. But then when they do the borrows, they're giving like 2/3 of that back to the customer. They're honoring that, instead of, I don't know when the last time, JP Morgan offered me a cut of that on my margin account with their borrowing my stock. The street never gave us shit, right? And this is different. It's like, it is a spirit, and to compete in it, you can't be a greedy pig, right? And so I love that about crypto. And I really look at Bitcoin like, the fascinating thing, and we'll tie it up on this. So it's all in the theme. I've always called Bitcoin, with people that know the street on all angles, it's global too. And it's like to me, it's a global low float penny stock that everybody's interested in, right? Like, that's what it is. There's not a lot of it out there, and the adoption grows. And what happened in India today? That was big news that I saw on your Twitter.
Yeah. So, India had been making, as many countries, making angry statements about crypto, like we should ban it, and they kind of banned it and not banned it. They unbanked all the crypto exchanges one period of time, a few years ago. And there was a big movement coming through, driven by Narendra Modi, the Prime Minister, that they were probably going to come down hard on it. The budget gets announced yesterday in India, and the budget says, oh, crypto, they're virtual digital assets and they're not currencies. So it doesn't conflict with the rupee. So we're like, you know, rupee, the currency, different thing. These are virtual digital assets, and we're going to tax them at 20% of capital gains, 30%. Now, it's a high tax rate, blah, blah, blah. Doesn't matter. It's the start. Like today, Thailand announced that it's moving its capital gains from 15% to 0 or whatever it's doing, because that's what will happen. But you've basically been given the green right to 1.3 billion people, and Indians kind of understand the value of gold. They understand these savings instruments, and they're, you know, that kind of top 200 million people are highly educated, very mathematical. I mean, Bitcoin's like perfect for them. They're big with technology, and they've usually got friends and family who live in different countries. So the diaspora wants to send money to each other. All of this, you know, you want to send your auntie some money immediately. It's a shit show to send it to India. I mean, I'm half Indian, so I know what it's like. But stable coins, I could send it to my cousin in, you know, 2 minutes.
Absolutely. And they could do that whether they approved it or not. Actually, what are they going to do to enforce? Nothing. They can't. So, you know, that is big news, though, that adoption. I'll end it on this. Like, I could talk to you forever, but basically, hopefully I'll see you next time in Miami, or we'll link up. But the gold Bitcoin thing, this is just something to, you know, that we could maybe get into personally or like privately or whatever. But tell me where is the store of value written about in the white paper? It doesn't exist.
It refers to it as digital gold in the white paper itself.
Well, it does. It's actually modeled after gold. So I don't understand why crypto players would say gold sucks when what we have with Bitcoin was modeled upon it. Why would you even like Bitcoin?
Yeah, I mean, you see, particularly the Bitcoin space, what they're trying to do is build their network. I bring as much people into the network because that drives the value up. So what they do is attack anybody who's outside it. You're shit, this is a better thing, right? It's like religion. So that's what they do. So that's why they attack gold. The reality is anybody who's a pragmatist goes, yeah, look, gold's pretty proven. It's useful. This crypto stuff looks like it's potentially a good store of value. It has a lot of attributes of being able to move it around. It's very transportable and divisible and stuff that gold isn't. So it kind of makes sense. Now, in a pragmatic, ordinary, balanced human being, you'd say, well, I'll probably own a bit of both. Or if you say,
the thing is Raoul, it's foolish because the gold people understand it. If you just get the dynamics correct, I want the network to grow too. That's what's made me the most money is my crypto, my Bitcoin. But you know, why would you attack the one thing that was modeled? This was modeled after where they've got two different functions.
Because the gold crowd are throwing rocks over the fence saying, this is magic internet money. It's bullshit. It's not gold.
Yeah, but those are idiot, like people that call themselves gold bugs. Like people call me a gold bug and I'm like, I'm not a bug. I'm a gold bull. Okay. And that will turn at some point. But, you know, those people are going to get left behind and they'll come around at $2 million Bitcoin. But the crypto people, from our own interest, I think, you know, just go after the combination of the two to go after the market share of fiat. It's quicker.
But I just think the narrative's moved on. So, you know, Grayscale is not going to make another video about dropping gold because they've kind of done that. The narrative's moved on so fast now with DeFi and NFTs and Ethereum and everything else that really everybody's peeking over the fence from Bitcoin saying, okay, actually, I can see what this is a whole world out there. And that very closed narrative of gold against Bitcoin, it's become less relevant, just simply less relevant. And as you say, the broad-minded gold crowd say, yeah, get this, I'll have some of that. And, you know, anybody I know is a traditional macro investor, you know, they always have a propensity to buy gold because they understand its purpose and value in a system. Now, gold is never going to be the best performing asset over extended periods of time.
No, it's not supposed to be.
It's not its job. So, you know, it's just, you know, and it's exhausting because we all have to keep educating people because a lot of people to crypto are new. They don't understand asset allocation. They don't understand markets. They don't understand risks. And they may not have to for a while because they're used to volatility, so they don't care, which is great. And they're used to exponential upside. So, you know, they haven't had to be in gold when it just goes sideways for 6 years. I mean, but, you know, it's a different world.
It's a different dynamic, but thank God for people like you who are out here evening the playing field. I really appreciate what you've done with Real Vision and just the, democratizing of smart money and education. It's up there for people to get educated, and we all need to ourselves, even, and who doesn't want to know more about their money? They should, right? But you've really done a wonderful job there, and just in terms of educating people, I love seeing you run with this stuff, even though it's a heavy weight to carry some days. And I just really appreciate your time today, Raoul.
Always a pleasure, my friend. Really enjoyed it.
Thank you, sir.